Did you know that the global ETF market is projected to reach $20 trillion by 2026? That is more than double its size in 2020. This explosive growth has left many investors wondering, are ETFs the golden ticket to financial success, or is there more to the story? Exchange-traded funds, or ETFs, have revolutionized the investment landscape since their introduction in the 1990s. These investment vehicles offer a unique blend of features that have made them increasingly popular among both novice and experienced investors. But like any investment strategy, ETFs come with their own set of advantages and drawbacks. Today, we will dive deep into the pros and cons of ETF investing, providing you with the knowledge you need to make informed decisions about your financial future. Let us start by exploring the advantages of ETF investing. One of the most significant benefits is diversification. ETFs typically track an index, sector, or basket of assets, allowing investors to gain exposure to a wide range of securities with a single purchase. For example, an S&P 500 ETF gives you ownership in 500 of the largest US companies, spreading your risk across various industries and sectors. This diversification can help protect your portfolio from the poor performance of individual stocks. Another major advantage of ETFs is their low-cost structure. Unlike actively managed mutual funds, most ETFs are passively managed, which means they have lower expense ratios. The average expense ratio for ETFs is around 0.44%, compared to 0.79% for mutual funds. This difference may seem small, but it can have a significant impact on your returns over time. For instance, on a $100,000 investment over 20 years, this difference in fees could result in over $15,000 in additional returns. Accessibility is another key benefit of ETFs. They trade on stock exchanges just like individual stocks, which means you can buy and sell them throughout the trading day at market prices. This is in contrast to mutual funds, which are priced and traded only once per day after the market closes. This flexibility allows investors to react quickly to market changes and implement various trading strategies. ETFs also offer a high level of transparency. Most ETF providers disclose their holdings daily, allowing investors to know exactly what they own. This transparency can be particularly valuable for those who want to maintain control over their asset allocation or avoid overexposure to certain sectors or companies. Tax efficiency is another advantage of ETFs. Due to their structure and the way they are traded, ETFs generally generate fewer capital gains distributions than mutual funds. This can result in lower tax bills for investors, especially those holding ETFs in taxable accounts. Lastly, ETFs offer great flexibility in terms of investment strategies. Whether you are looking for broad market exposure, sector-specific investments, or even inverse or leveraged positions, there is likely an ETF that fits your needs. This versatility allows investors to build diverse portfolios tailored to their specific goals and risk tolerance. Now, let us turn our attention to the potential drawbacks of ETF investing. One of the primary concerns is market risk. While ETFs offer diversification within their specific focus, they are still subject to the overall risks of the markets they track. For example, during the financial crisis of 2008, even well-diversified ETFs tracking major indices saw significant declines. It is crucial to remember that diversification does not eliminate risk entirely. Tracking errors can also be an issue with ETFs. This occurs when an ETF's performance deviates from the index it is designed to track. While generally small, these discrepancies can add up over time and affect your returns. Factors such as management fees, trading costs, and sampling techniques can all contribute to tracking errors. Limited customization is another potential drawback. While ETFs offer a wide range of options, they may not perfectly align with your individual investment goals or values. For instance, if you have specific ethical concerns, you might find it challenging to find an ETF that exactly matches your criteria without including companies you would prefer to avoid. The ease of trading ETFs can also lead to potential overtrading. The ability to buy and sell throughout the day might tempt some investors to engage in frequent trading, which can increase costs and potentially lead to poor investment decisions based on short-term market movements rather than long-term financial goals. Some ETFs, particularly those using complex strategies or tracking niche markets, can be quite complicated. Inverse ETFs, leveraged ETFs, and some commodity ETFs may behave in ways that are not intuitive to many investors. This complexity can lead to unexpected outcomes if not fully understood. Liquidity can also be a concern, especially for newer or more specialized ETFs. While popular, broad market ETFs typically have high trading volumes and tight bid-ask spreads, some niche ETFs may have lower liquidity. This can result in wider spreads and potentially higher costs when buying or selling. As we conclude our exploration of ETF investing, it is clear that like any investment vehicle, ETFs have both advantages and disadvantages. Their ability to offer diversification, low costs, and flexibility make them an attractive option for many investors. However, the potential for market risk, tracking errors, and the temptation of overtrading should not be overlooked. When considering ETF investing, it is crucial to align your choices with your overall investment strategy and risk tolerance. Take the time to understand the specific ETFs you are interested in, including their underlying holdings, expense ratios, and trading volumes. Remember that while ETFs can be powerful tools in your investment arsenal, they should be part of a well-thought-out, diversified investment plan. Ultimately, the decision to invest in ETFs should be based on your individual financial situation, goals, and comfort level with the associated risks and benefits. By weighing the pros and cons we have discussed today, you will be better equipped to make informed decisions about whether and how to incorporate ETFs into your investment portfolio. As with any significant financial decision, consider consulting with a qualified financial advisor to help you navigate the complexities of ETF investing and build a strategy that works for you.